Okay, 1.3, not very different, just different transactions. The other thing is down below, we're going to be doing the same thing. We're going to do plus, minus, and all on two accounts every time. Remember that. But we're going to actually put it in the account that it says to put it in, such as cash or accounts receivable. Again, I said accounts receivable is when somebody owes you money. So somebody took a loan out through you, and we call these accounts receivables. And I look at it and I'm going to receive my money later. So that's a difference between accounts receivable and accounts payable. Accounts receivable, I'm receiving the money. That's why it's over here an asset. And payable is I have to pay it at a different time. So kind of keep that into your mind there. So we're going to look up top here. I'm going to scroll mine down, but you can read your transactions. I received cash. So right there, I already know my first account from sales. So I'm going to put, I need to add to my cash. And then what would be going up as well? Because remember, I've got to keep my accounting equation equal. So if I'm getting money from cash, is my net worth going up? It should be. Later in the accounting, we'll actually have an account called sales, but we're going to plus 2 there as well. Number 2, we sold services on an account to Harmon Corp. So I sold services, same as sales. Sold services and sales are the same thing because we're doing financial documents for a service company. So I sold services on an account, meaning did I get cash? It didn't say anything about cash in there. It said somebody took a loan out through me. So that loan is going to be increasing. But also I'm pretty sure I'm going to get that money, so my net worth will also increase. That one's one of the hardest ones, just so you know. The next one, I paid cash, okay, right there. Number 3, I know I'm going to subtract from cash. And I paid for a cell phone bill. These are what's called expenses. Expenses are anything that is taken out of your business, that's a deduction from your business just for operation. So expenses like phone bill, rent, advertising, any of those are expenses. So we're going to, like I said, in the future, we're going to have more accounts and there will be a phone bill or a utilities expense. But for right now, we're not. So it's subtracting out of my owner equity. Okay, number 4, I received cash on an account. So right there, I received cash. So I'm going to plus to my cash, but their loan is going to be going down. So here again, I'm moving an asset into an asset. So subtract from their loan, but my accounting equation is still equal because I'm moving an asset into another asset. Okay, number 5 is owner withdrew equity from in form of a cash. So they're taking money out of the business. We call this a withdrawal. That's kind of important to know. We're withdrawing money from the company as an owner or however. So it said it was in the form of cash. If we were selling like a truck to the owner, we could take that asset and give it to the owner. But this time they said you are getting cash out. So we're going to subtract cash and we're going to subtract our capital. And we're going to call this a drawing account because it's a short for withdrawal. So a couple more accounts, still the same thing. We're still dealing with the accounting equation. All right, and you're going to check and save and continue.